Okay, hello and welcome everyone. Welcome to JFD Brokers Traders Tea Time with me, Darius Anucauskas. Today's the 24th of January 2019, so welcome everyone. Welcome to this Thursday's afternoon session where we're going to have a look at the markets, a few charts. But before we start jumping into those, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, let's quickly jump into the charts. Now, the first one I want to touch on here is the S&P 500. Now, of course, looking at this one right now, looking at the daily chart here, you can see that we're not far from this downside resistance line taken from the high of the 3rd of October. Certainly did have a chance to reach that on the 18th, so which is last Friday, but kind of failed, fell shy of reaching that by just a few points here. So in a way, we're going to continue monitoring this downside resistance line. Looking at the cash index where it is trading right now, it could be just slightly above the yesterday's closing price, but probably will be around the same area. We won't have any like drastic gaps here. So basically, continue monitoring this one. It does have a chance to continue further up here, especially given the fact that it's not quite not far from this downside resistance line. So also the level to watch here would be the 2,672 mark approximately there. This is where the price kind of got held here on Friday. But slightly above that, we do have another potential good area of resistance near the 2,685 zone, which was marked here by the high of the 12th of December. So in a way, guys, keep your eyes on this. And if we'll jump into a 4-hour chart on this one, let me just do that quickly. Basically, you could in a way keep on monitoring this one and looking at basically here, if it's, well, long story short, basically, guys, if it decides to continue pushing higher here and we get a nice push above yesterday's highs, which were around here, which were around the R1, and that's approximately around the 2,655 level. So a nice good push above that could open the path towards that this long-awaited test of this downside resistance line. But if this decides to reverse back down, for us to get comfortable with lower levels, we need to see a nice good drop here below the 2,600 level, and only then we will target much lower areas. Again, maybe going back towards the 2,520, which was marked here by the highs of the 28th of December. But for now, basically from the very short-term perspective, this is what we're keeping a close eye on. On the upside is the 2,655 level, and on the downside is the in a way a nice good round number of 2,600. So for now, be very careful, be very cautious on this one, and let's see how this plays out today. But again, for now, to be honest, it's really difficult to say that certainly it seems to continue climbing higher. The only thing is that currently it seems that it's losing momentum as well. So that's why, guys, be very cautious on this one. It could be nice to see a nice good test of this downside resistance line, but for example, if this decides to travel lower and maybe find a support level somewhere below here from which it could reverse and push back up here in the near term, so maybe something like that could happen. But for now, guys, probably just let's play it safe and keep an eye on the 2,655 level on the upside and the 2,600 level on the downside. Jumping into DXY now, this one is looking quite amazing here. So basically, I was talking about this one in one of my videos this week, where I was telling you guys to keep on monitoring this downside resistance line, which could play out as a nice bouncing ground for this index. And as you can see, that it played out exactly that role, and from which it kind of reversed to the upside here, managed to reach this key area of resistance near the 96.50 level. Of course, it did have an overshoot here a little bit, but quickly got back below this, and now it's aiming lower. Of course, we're here in this stage here, at this stage here, we're going to remain a little bit more on the neutral side, because it is a bit tricky here, because it could go either way. But let's say what we're going to keep on monitoring here from the near-term perspective, basically we're still going to keep an eye on this 96.50 level. A nice good pop above that could open the path towards these higher levels, towards the 97 level, of course. But for now, guys, probably this is where we're going to remain neutral, because if it continues dropping further down, this is the level we're going to be watching for the downside, and that's the 96 level. So a nice good drop below the 96 level could also place the index below this downside resistance line, which would also be a bit of a bearish indication. So be very careful. It's a very interesting index, and it's very interesting to if you don't trade it, at least monitor it, because well, that's the dollar index basically. Jumping into NZDCAD, guys. So looking at this one, very attractive formation here, nice good range, so range traders paradise. So we can see that the pair has been trading within this range between the 0.8915 level on the downside and the 0.9080 zone on the upside. So it has been trading here since the beginning of January, so very important to continue observing these areas. If this decides to reverse back down here again and decides to travel towards the lower bound of this range, then, well, for a better confirmation of the downside, guys, from the very short-term perspective, we would need to see a nice good drop below the 0.9030 level, approximately there. Let me just quickly actually mark that for future reference, and this is the level that we're going to be keeping a close eye on here. So approximately around the 0.9030, a nice good drop below this could send this pair towards a test of the psychological 0.90 level. So also could be a nice good area, but maybe just slightly below that. We do have other potential area of support near the 0.8910, so just about 10 pips away from the psychological 0.90 level. So keep your eyes on this little area. This could play out nicely if we get a nice drop below the 0.9030 level. So let's see how this plays out. But if this decides to actually continue pushing higher here, and we finally get our break here through the upper bound of this range, well, guys, I mean, this could be a good opportunity to maybe for the bulls to lift this pair towards the 0.9165 zone, where you can see that last time it acted as a good area of resistance back from between the 26th of December and around the or should I say the 31st of December and the 1st of January as well. So in this little period here, it acted as a strong area of resistance, so that's why we could target that area again and see how it plays out around here. But in order to kind of consider that area, we need to get a nice good pop above the 0.9080 level. So keep your eyes on that one. Let's see how this plays out. Jumping into AUDUSD, so this one, of course, is feeling the heat a little bit. Let's put it that way. It's trading currently below this key important area of support, which now is kind of acting as a level of resistance, and that's approximately around the 0.7115. So continue monitoring that one, because if this decides to travel further up here, this is where we will take a bit of a neutral stand, because in order for us to, let's say, start considering higher levels, we would need to see this one traveling back above this 0.7160 level, and then we'll target higher levels, previous levels like 0.7240, or even actually targeting all the way here this downside resistance line. And let me just drag this chart a little bit back to and just to kind of remind you that this line here, it's a bit of a tentative one. I do understand that, because it's missing a lot of action here, but still connects to these two peaks, and that has been taken from the highs of January last year. So in a way, basically, guys, long story short, on the upside, even if it's going to get above the 0.7115 level, well, in order to kind of consider much higher levels here, to be honest, for us, we would need to see a nice good pop above the 0.7160 level first, and then we'll target higher levels. On the downside, if the 0.7115 continues to hold and kind of the bulls kind of fail to drive this pair back above it, then, well, a break below the 0.70, let me just quickly zoom in here a little bit. So a break below the 0.7080 zone, this is where it could become exciting for more bears, and in this situation, because this could potentially, the break below this could lead towards these lower levels like the 0.7020, or even actually a little bit lower, going back below the 0.70 level and towards the 0.6970. So again, guys, for the upside here, the 0.7160 level, that's what we're keeping a close eye on. A nice good pop above it, this could lead towards slightly higher levels, of course, and a drop below the 0.7080 zone. This is where it could become more exciting for more bears. So be very careful, watch out for this one. Let's see how this plays out. Jumping into GBP Aussie now, something that I really wanted to quickly run by you guys. Basically, as you can see from the chart here, we are trading in this nice rising channel formation. So what we're going to keep on monitoring here, of course, we're going to keep on monitoring this key area of resistance where the pair found good, where actually the pair got held nicely here near the 1.84 level, from which you can see that today is kind of retracing back down. But in order to kind of consider further declines here, we would probably need to wait until this drops below this little area of potential support. Let me just quickly mark that on our chart, and that's approximately around the 1.8260 level. So this is where we're going to be keeping a close eye on. So let's move a little bit. There we go. So 1.8260, this is something that we're going to be keeping a close eye on, because a nice good drop below this could potentially confirm a further decline, where we will then target the 1.8190, or even actually going much lower here. So, but of course, for now, because given the fact that it's still quite far away from this level, we're just going to continue being neutral here a little bit, because to be honest, it has the same chance of reversing back up here, breaking this 184 level, and then pushing higher above the upper bound of the rising channel here. And in that case, if we do see something like that, then the 1.8560 level could be our next potential area of resistance, given the fact that it acted as a very good area here on the 16th of October. This area held the rate nicely from moving higher, and this is what we're going to be keeping a close eye on. But again, I'll repeat myself, only if we see a nice good pop above the 1.84 level, and then a break of the upper bound of this rising channel formation. So in a way, that's the scenario for the upside. For the downside, once again, a break below the 182.60. This is what we're keeping a close eye on in order to consider further declines. And the last pair I wanted to quickly touch on, and that's euro dollar. Certainly having a lot of action here, and seeing a lot of action. So basically, long story short, guys, we managed to break this upside support line, this medium-term upside support line that has been running here from the lows of November last year. But you can see that we managed to reach the 113.10, from which the pair quickly reversed back up here and managed to push higher. And now we've already managed to test the pivot here, which is near the 113.75 approximately there. So of course, this is very exciting right now to see how this is going to end up the day. If this decides to reverse back down again and drops below the 113.35, now this is where we will target these lower levels again. Of course, the 113.10 level again. But if even that fails, then yep, further declines are possible towards the 112.70. But again, like I said, because it kind of continues to trade above this upside support line, certainly this is more looking more positive, looking more bullish than bearish. but again, for a better confirmation of the upside, or further acceleration to the upside, we would need to see a nice good pop above the nice good beautiful number of 114. So only then we will target much higher levels. So for now, we're just gonna continue observing it, because you can see it wants to rise further up here. Let's see if it actually manages to reach the 114 level. If it does, then of course all eyes are on the potential break. If we do get a break above that, then the 114.25 is the next little area of resistance that we're going to be keeping a close eye on. Okay guys, I hope you found it useful, and thank you very much for watching and listening. And if you want to join me tomorrow morning at my Traders Espresso, and that's 7 o'clock GMT time. But for now, I hope you have a fantastic evening. Bye bye.